What is good? Welcome back to the Trading Den, and in today's module we will be going over how to identify high probability order blocks, which is the change in the state of delivery. I don't know if it was ICT or not, but I'm pretty sure it was. He said opportunities are born in the change in the state of delivery, and we are going to be going over that right now. This is also how you identify higher time frame order flow. Order blocks and whether they are not, or whether they are being respected or not, is higher time frame order flow. So identify higher time frame order flow is high probability order blocks. So we're going to get into the order blocks, the change in the state of delivery, and how the higher time frame order flow is identified by this. So to identify order blocks, bullish order blocks is the last down close candle before the expansion higher. The last down close candle. Now, if we have a series of down close candles, so let's say we have a price leg that takes out a liquidity pool, and in this price leg, we have multiple down close candles, all of them can act as the order block. Now, I will go over how to identify which order block to use, but it is a series of down close candles if there is a series. Now the bearish order blocks are the last up close candle before the expansion lower. The last up close candles, right? Because it is a series before the expansion lower. So let's hop into the charts and identify these. So here we are on the NASDAQ 5-minute chart, and I want you to take a look at this price action right here. We can see that we are pairing orders underneath a low. Notice we have not closed the body candle underneath this. So this candle right here is where your all eyes should draw to. This candle. Now the change in the state of delivery will occur whenever we close a body candle up above this candle's body's open. So it's not the wick, it is the body's candle open. So as soon as that happens, it occurs to be the plus order block. So now that this candle has gotten closed above, right, just because it wasn't closed just above the open, it was closed above the wick as well. This candle just ran through and now will act as support because this candle drew to a low and made a low, and then we had an expansion higher. Now this will act as your plus order block, and we have a fair value gap inside as well. So this is adding confluence to your trade. This now will identify as a bullish order block and should hold price higher. Now, whenever we get support from that order block, any down close candles that traded into that order block will now support price higher. So these two candles right here, you can use the wicks as well. I only use the bodies, but you can use the wicks. We can see that this wick right here holds price right here to go higher. So take a look at this piece of price action throughout here. What do we see? We see a new high being created. Order pairing above a high. So now we have a high resistance liquidity run. Expansion lower. These two candles right here should support price to go lower if the draw is lower. So we mark out the body candles open. This will act as your negative order block, and as you see, we trade into it, expand lower. Now that this up close candle has helped trade into this negative order block, this now becomes a negative order block as well. Trade into that, and then we offer sell side at this low once again. So we trade into this order block. This candle helped trade into this order block, close below the body candles open, change in the state of delivery. This will now support price to go lower. So let's take a look at this piece of price action throughout here. What do we see here? We see that this makes a new low. No body candle closed above here. So we move on. What do we see here? A new low. Now we have a soup. Now we draw our eyes to this body candle's open. Closure above this body candle. So we have a closure above the open of this body. Now this should support price higher, right? These two candles should now support price higher. Now, another thing you can do when we have a series of up close candles is pull out your fib tool, measure out the mean threshold of the series of order blocks. So you measure from the body candle's close of the last down close candle to the start of the first down close candle, since it is a bullish order block. Now this is your mean threshold. The mean threshold of both these candles right here supports price right here. Now that this candle has gotten closed above, this should support price higher. Trade into it. Body candle closes above the body open right here. Trades down into it. We probably go a little below mean threshold. A little below mean threshold. Expansion higher. So you can see that these down close candles support price to go higher. This candle supports price to go higher. Then when we close a body above this candle's open, supports price to go higher. And then we trade into a fair value gap and then reach that draw on liquidity. So here we are on the 1 minute chart, because everybody likes trading the 1 minute for some reason. We can see that this series of down close candles has taken a new low. So now we've created a new low. Now our eyes draw to what? This open. This, when it gets closed above the open of this, right? Change in the state of delivery can occur before market structure shifts. I want to put that out there now. But you can see that we close a body candle above the open of this candle right here, trade down into it, go higher, trade into it again, expansion higher. Then whenever we close a body candle above this series of candles, that will act as your order block. Trade down into it, expansion higher to reach this draw on liquidity, and then finally go target this high up here. And in this same piece of price action before we reach this draw on liquidity, what do we see here? A new low being made. So now we have a low taken. This series of down close candles is traded into that. We mark out this candle right here. These become your plus order block. Since we have a series, we can measure out mean threshold, trade into mean threshold. Notice no body closures below mean threshold. And then we expand and then finally go take out this buy side liquidity. So as you see throughout here, expansion lower, taking out a new low, close above this candle right here, series. Also, we can do this, but we never reach mean threshold. This order block supports price to go higher. When we close above this series, trades into it, expansion higher, we form a new low, take out that low, expansion higher, series of down close candles will support price to go to that draw on liquidity. Now, the next thing I want to go over is how to identify higher time frame order flow by using order blocks. So I want to go over how to identify higher time frame institutional order flow. Institutional order flow is identified by using order blocks. Okay, so if we take a look at this piece of price action all throughout here, we can notice that we are obviously very bullish. Okay, so right here we make equal lows, so no sell side swept quite yet. Okay, so right here we have this swing low right here. We take out this swing low right here. So our eyes on the higher time frame would draw to this candle's open. Now, whenever we sweep this low, our eyes will now draw to this candle's open. Look, we close above and trade into it. Now, when it's respected on the lower time frames, that's where you find your setups. But if the higher time frame respects this order block, we should be in bullish order flow. So now we trade into that once, twice, expansion higher. Then this is overnight session. So our eyes will draw to the next day. So we have respected this order block. So bullish order flow so far. Now when we create a new high, all of these up close candles need to be closed below. So this open right here, all of these, right? It's not just one or two. It's not just this candle or this candle, it is the series. So notice, we come the entire way down here, no body candle closure below. So right here, we have a swing high. Sorry. No. Right here when we take out this swing low with this candle, now this series of down close candles our eyes will draw to. So we close above it. Notice right here, we are testing all of these. Let's see if we test mean threshold. Perfect test of mean threshold. So whenever we respect it to go higher, now order flow is clearly bullish. So notice right here, create a new swing low. So once we close a body candle above this open, we now have a change in the state of delivery. Notice no candles came down to test it though. So we go to the next time we make a swing low. Notice, so right here we make a swing low, our eyes would draw to this candle. Close above it, take out buy side. So nothing to do yet because we have taken buy side. Make a new swing low right here. Body candle, close above right here. Have not taken buy side yet. Trade into it with this candle right here. Go take buy side. Okay. So now, well, obviously you can see hindsight, but now we make a new swing high. Okay, so our eyes draw to this candle's low, or open, sorry. Trade into it, expand lower. This could mean that order flow is now flipping to become bearish. Okay, so notice swing high right here. We have a new high. Body candle closure below this open right here. Respect it continuously. And what do we see here? We have a new swing high, taking out this high. Okay, let's mark this candle. Tap into it, respect to go lower. Okay, now we are making progress to go into bearish order flow. So now we are waiting again, right? Lower time frames give you your entries. Nothing to do since we have not taken a high throughout here. So we are going to go until we see something that sets up. So right here we create a new swing low. Our eyes draw to that open. Never closed above. This candle makes a swing high. Expansion lower. Nothing to do yet. Swing low, taken out right here. Our eyes draw to what? This open. Never closed above. So we keep moving on until it's closed above that created a new low. This is how you are identifying order flow. Notice right here, take out a swing low with these candles. Our eyes draw to this. Never closed above. Notice right here we take out a high with this up close candle. So we drag that out. Notice we respect it. No body candle closure above it. Respect to go lower. Take out this low. Our eyes draw to this high. Never comes up here. So now, oh look, we now have taken out all of these. So these two candles right here that take out these lows become your change in the state of delivery. Expansion up through. We now have a new swing high, right? We take out these highs. So this series, if we were going to remain bearish, would get closed below. But as you see, we don't come down, tap into it. No low taken, so this would not be your order block. Okay, trade into it again. Oh, look, swing low taken out. This candle right here becomes your change in the state of delivery. Trade into it. Or, sorry, we don't trade into it. Close above it. Expansion higher. This piece of price action, we do nothing. Make a new swing high, taking out this buy side. Our eyes draw to this candle. Candles open. Never comes close to closing below. Okay, take out this swing low. Our eyes draw to this series of down close candles. Closed above. Trades into it. Order flow remains bullish. Make a new swing high up here. Oops. Never close below. Make a new swing high. This candle right here becomes your order block after we make this swing high. Why does this become your order block? It's because this was the up close candle before taking out buy side, right? Okay, this same candle that took out buy side closes below. Notice what this candle does. We do drive further into it because, I mean, look at this candle. It's not thick like this one. This is a low probability order block. Anyways, it still remains the same. You're not taking trades unless you're swing trading off of them. You are looking for the lower time frame entries. So, trade into it, expansion lower. Are we going to go into bearish order flow? I don't know. Let's take a look. We take out a swing low. Closure above, that means that this is the change in the state of delivery. These are two thick candles. Take out your mean threshold. Almost come, wait, do we? 65.75. Low 66.50. Almost come to mean threshold. Anyways, we do not hit mean threshold. We respect these candles to go higher. Take out buy side. Our eyes draw to this. Never closed below. Okay, so we're just chilling, just chilling. Take out this high. Our eyes draw to this candle. Trade into it. Go take out sell side. We made a new swing low. Our eyes draw to these series of down close candles. Close above. Trade into it. Keep trading into it. Take out buy side. Where do our eyes draw? This candle. Never take out buy side with this high here. So we still have our eyes on this candle. Close below right here. Notice we come up, tap into it. Expansion lower. We make a new low. Our eyes draw to what? This. Close above. Trade into it. Trade into it. Expansion higher. Make a new swing low. Our eyes draw to what? This. Are you guys getting the point? Let's go over a little more. Make a new swing high. This candle becomes the order block. Close below. Notice over here. Oh, we don't. Well, we tap into the wick. Right? You can use the wick. I don't like using the wick, but you can. Make a new swing low right here. Close above. Never comes down to tap it. Expansion higher. Make a new swing high right here, right? We take out this swing high. So, our eyes draw to this. Kind of support, but we expand up through. Let's measure out mean threshold. Violate mean threshold a little bit, but never would have came the entire way up here. Expansion, expand. Are you guys understanding this? I could keep going on and on, but this is how you identify higher time frame institutional order flow. By which order blocks we are respecting. So we make a new swing high right here, right? We take out this swing high. This becomes your order block. Why? Because we have no swing high here, because this is the candle that took out this high. And we never retook buy side liquidity, right? We never have a new swing high. We do up here. But this candle was the one that created the swing high that took out this buy side. So right here becomes your order block. We trade into it. Expansion lower. Make a new swing low. Taking out this. This becomes your order block. We try to hold it. We make a new swing low. This becomes your order block. And anyways, this would have became your negative order block whenever we took out this swing high. We trade down, take out this swing low. Expansion up through, because this series of up close or down close candles was the ones that took out this low. Close above here. We can measure out mean threshold. Come down and tap into mean threshold. We take out these lows. Our eyes draw to this candle. Close above, changing the state of delivery. Expansion higher. This is how you identify higher time frame institutional order flow. If you have any questions, message me in the Discord.